Welcome to the In Early podcast, where I speak to those at the forefront of the digital assets and technology sectors, telling real-life stories, considering the growth and growing pains of the industry, and exploring how blockchain and other technology has made an impact on people's lives. My name is Matt Green, and I head up blockchain, digital assets, and technology disputes at law firm Lawrence Stevens. This week, I speak to Stephanie Larivee. Okay. This week, I speak to Stephanie Larivee, director at Cork Gully. Stephanie has experience making eye-wateringly high distributions following liquidations of digital asset exchanges and talks about how she helps creditors recoup their money from around the globe. I hope you enjoy. Stephanie, welcome.
Thank you for having me.
Tell us what Cork Gully does. What are you guys all about?
Sure. So we are a restructuring and insolvency firm. I think the type of cases that we do tend to be a little bit weird, complex, cross-border, something that's a little bit weird and wonderful.
A little bit more difficult than...
A little bit more difficult, a little bit more challenging. Really up for challenge. And for myself, so I'm a licensed insolvency practitioner. I'm a chartered accountant. So background is I've probably done most industries that you can ever imagine. But in the last few years, I've kind of grown in specialization for financial services. So a lot of electronic money, a lot of payment services firms, including special administrations, but a high cost short term, anything with FCA permissions rather, and more recently digital assets.
So it's about the difficult stuff, digital money, that kind of stuff.
Yeah, absolutely.
And you've come here today to talk through some of the work you've been doing on some of the digital asset cases, including distributions for USDC for a failed platform and various other appointments as liquidators to overseeing various wind-up scenarios. Looking at one of the company's websites, there's a notice which reads, I'm going to read it, quote, "The liquidator's role includes assessing the company's financial affairs, collecting and liquidating assets, and managing customer and stakeholder claims in accordance with legal requirements. Subsequently, all communications concerning liquidation proceedings will now be directed through Cork Gully. Our priority is to optimize the realizable value from the company for all parties, and we will ensure that all stakeholders, including creditors, customers, employees, and regulatory authorities, are informed and supported throughout the process." During this challenging period, I like that by the way, the liquidators are committed to a robust, transparent and efficient process and will provide regular updates on the process of the liquidation, end quote. So that's on one of the companies that you've been dealing with website now that you've taken over. Before we get into it, tell us about the profile of some of these cases, bearing in mind messages like that on people's websites, and as much as what they do generally. So the company that has that on their website, what do they do? What's happened?
Yeah, sure, of course. So for that one in particular, that was a platform which was used to generate yield for digital assets. That's in the Seychelles. So that was obviously a bailed platform, and it ended up being an insolvent liquidation. We've also got a couple of others. So there's two in Cayman rather, which were solvent exits, which were investment managers as well. And those also had digital assets. Another one in BVI, which was a provisional court-appointed liquidation followed by an actual liquidation, which is obviously insolvent. And then we also have a couple of others too, one more recently in the UK that I've been helping, which is a digital asset platform in the UK, but looking to do a solvent exit with them. So that's probably going to be a share buyout. And then another one, which is quite interesting, which was also a solvent exit, which basically wasn't crypto as such, but it did have distributed ledger technology that was basically used to digitize fixed income markets.
And is this something that's common across these kinds of platforms, digital assets, crypto? Is there a lot of insolvencies? Because you read the news, right, and you've had FTX, you see all this stuff, and not all of it makes the headlines. So are you seeing a lot of it?
That's true. I think it depends on what jurisdiction you're in. I think definitely in the UK, it's still probably very much in its infancy, obviously,
Because no one provides services and registers.
Yeah, well, yet, hopefully, right? I know the FCA are working hard to try and fix that and give some clarity, as everybody seems to be. So yeah, we'll see. We have to watch that space.
Are you thinking it's Cayman and BVI, sort of those jurisdictions?
Yeah, I think so. I think hearing more about Gibraltar and other areas as well too. So it's very much cross border, as we know that these types of profile of businesses tend to operate where the internet is good and where the restrictions are not
low,
stringent. Yeah.
There was someone I spoke to recently from a jurisdiction which was I don't know whether it's fair to say offshore, but they were like, look, so long as it's not illegal and net bad, we will take on any advice anybody wants to give us. And I quite like that. But I wonder whether it's in that environment that these issues arise. They
I
probably
think
are.
so, and if you think about, like, the type of people that are operating the space, it's, it is fairly inherently doesn't want the man to be involved. It's supposed to be decentralized, all of that
Libertarian
stuff.
stuff. Yeah, I love all the philosophy of it.
Yeah,
It's great.
yeah,
So from my understanding, one of these cases had $550 million of managed assets, including of its balances at your appointment, 42% Bitcoin and 31% Ether. By the sound of it, to me at least, there should be this should be a firm with sufficient assets, especially as the price, well, it depends on what day we record and release, but the price is pretty good for Bitcoin at least. Tell us how a company like this, a platform that deals with assets, that has a big treasury,
yeah.
how they become insolvent.
Yeah, so unfortunately in this situation, it was a case of they had a whole lot of, customers came to the platform, you put money onto the platform, and digital assets, 20 odd different token types. And then the customer's expecting to get the increase in the value of the asset and also the return that they're expecting from how they've deployed their products. So there's already quite a high bar in terms of the types of yield that the directors were going to have to try and generate to be able to actually meet those returns. So they started off using DeFi products and trying to get their heads around that, but I'm not sure that it kind of worked out as well as what they had hoped. So then they moved back to TradFi and took everything out, converted it to USD, and then put 140 mil out for some managers and the likes of it. And basically, we saw what happened in November 22, and a lot of the investment managers where they had funds had quite a lot of exposure in FTX. A lot of them hadn't held their nerve and sold out the positions for, as we all know, quite
Liquidator.
a low amount. Yeah, yeah.
Yeah, yeah, yeah.
And a lot of them had tried to conceal the position as well. So I think all of that kind of combined um, got them into the situation where they were.
What I find interesting about that is the promise made at the start. If you deposit your assets with us, there will be a capital gain. Whether that can be true or not as a promise, I'm not sure. But the intention is for a capital gain. But then the really tricky thing is the amount of yield that's supposed to be generated. And if that yield can't be generated, then there's panic. So I wonder whether, in the classic case of everybody dealing with digital assets, it's the same old adage, but it's overpromising.
Yes.
And I think by the sounds of it, there was an overpromise. It was here's what we're going to tell the world we're going to do, and we'll figure out exactly how later.
Yeah.
And that's
Yeah. I
that's
wasn't.
symptomatic of this industry.
Yeah, just completely. I wouldn't disagree, but that matter might be before the courts at the moment as well. So we'll wait to see
Yeah,
what
yeah,
happens.
fine,
Yeah.
fine. And what kind of creditors are usually affected in these institutions? Who are these people?
Yeah, sure. So the level of harm that we've seen has been global. You can imagine all the types of jurisdictions that we would usually see. And I think it's probably, 70-80% of the world in terms of heat mapping for some of these customers that we've done. And it's quite interesting in some of the behavior that we've seen as well, because normally if you've got like a special administration and it's electronic money or payment services, you're going to get people claiming for £10 or whatever because that's what they're owed. In this situation, the profile of customers that we're seeing, so we've got about 97% in value of claims, but it only represented about 23% of the total creditors, which was quite interesting. That's across 14,000 odd, 1,500 around the world. So it was, yeah, it was interesting to see.
Well, I suppose it's quite difficult to try and find these people. I mean, in a nutshell, how does this all work? How do you communicate with these people? And what role do you, Stephanie, play?
Sure. So finding these people was just more about using the platform and the existing types of infrastructure that you've already got. There's
Because
also
they're always communicating, aren't they, with
Yeah,
their
with the app, and there's a built-in language model as well, so we kept that running for a period of time to make sure, keep the website going, get our own FAQs of frequently asked questions in place, all of that kind of stuff. So that was quite helpful, but also we engaged with the creditors committee very early on. We didn't have to because it wasn't under English law, but it's a well-trodden path for us, and that's how you get good representation to make sure that you're holding everything to an English standard.
Um, and then I understand from one of your cases that, and I quote, although I'm not entirely sure where I'm quoting from, I think it was one of your papers that was released. It says the liquidators enabled an early interim distribution of 14 cents in the dollar, releasing 74% of the estate, end quote. For lay people like me, and inevitably for my dad, who always listens, what does that mean? And doesn't 14% seem low?
Yeah, so I think for us, I agree, 14 does seem low, but unfortunately, we can't pay out what we don't have. And so we're in a position where we're trying to desperately recover assets and create value for creditors so that we can return assets. And we basically tried to do it within 6 months, as early as we possibly could, because we can see the harm that has been caused and some of the values of what these creditors owed. A lot of people lost their life savings. It's quite serious stuff. So we wanted to make sure that we showed their best foot forward, trying to get money back to people as soon as possible.
Does that mean that you'd rather give a little bit now? I suppose as an interim payment, isn't it, just to make sure that people are given something, and then you're going to just keep chasing the money as best you can,
Absolutely.
rather than waiting until you get a massive chunk for one person?
Yeah, completely. So I think we got quite a lot of the recoveries from investment managers quite early on, and other like avenues like that, including taking custody of assets, etc. So we did have stuff that was sat there ready to go. And the other part of the distribution, if we do, when we hopefully do a second one, will be by virtue of recoveries from things that've got a longer tail. So, you know, all your typical causes of action and insolvency, like undervalued transactions and the rest of it.
Um, and how do you correspond with these creditors globally? Because there are so many in the examples that we're given, especially they're worldwide. I mean, these are platforms
Yes.
and digital assets that have no real jurisdiction, subject to what our own law commission, etc., may or may not agree with. But how do you get in as much as you obtain the details, you use, as you said, the your existing channels,
Yeah.
and then I guess you have to set up groups and speak to them on the ground, or is it, as you said, a committee? How does it work?
Yeah, so it does depend, I guess, on the platform. So for one that we've got at the minute, like I said, we've got the customer committee, so credit committee rather, that's engaging with them. So there's meetings every couple of weeks just to go over an agenda and make sure that everything's progressing in the way that they thought it should. We've got reports that we release. They were quarterly. We're now going to move that to 6 monthly, just and update the FAQs more frequently. For these guys though, they are very interconnected with all of the creditor groups, and I think you'd be naive to think that you could deal with a digital asset case and not have your name posted on Discord or a sub or
Right.
Telegram or somewhere like that. So you really, and people will come for you too because it's so heavily anonymized in these types of situations. So you really have to be ready to.
You're not a meme or anything.
Not as far as I know. Hopefully not.
My old team, one of the members became a meme in a case I worked with.
Really? Oh gosh.
Yeah, it's pretty odd. So talk us through how asset recovery works here. How do you get the assets back?
Yeah, so it's an interesting question. I think there's a couple of bits to unpick. So it is still just liquidation at the end of the day. So you've got assets on like fire blocks or whatever, and you need to make sure that you've taken custody of those, or you've got them with different sub managers, or you've got them in trading positions, or whatever that you need to close out, or keep trading depending on what the assets are. But it's not our job to speculate, and I think that's quite important. So that's also another reason of why the early distribution is good, because you don't want to hold volatile assets, because it gives me heart palpitations. Because you don't want to put creditors in a worse position than what they're already in. Um,
But just to pause there, surely they already know that the assets go up and down. So it's not necessarily your responsibility is to take custody of them, but it doesn't mean that you can guarantee that they're going to hold their value.
they'll still have something to say about it. And if it's one of those situations, I think you're damned if you do and you're damned if you don't.
Got you.
So if you sold them out, if you tried to pay them in fiat, you'd probably have quite a lot of. Then you might be a meme. It might go over the. It'd be difficult to say. And then you've got so yes, you've got all your usual stuff like that, and then going after people to make sure that they've repaid what they should. And then other things in terms of investigations to see where things have gone. So that's when you use like your blockchain analytics and Cereum Labs or whatever tools might be, or in the background for that.
Well, that was my next question, but you've already answered it. You have to use blockchain analytics tool to find out where assets have gone. And I guess that's vital for you in your line of business.
Yeah, completely. And I think, for me, because I was probably fairly late on the scene in terms of crypto. I've only been dealing with it for the last couple of years. So it was a really big learning curve to get my head around. I was really reliant on, experts in the industry to help bring me up to speed on that. But now I can see like the steps that I would take each time before going into this. And the things that would be beneficial, like including a master list of wallets so that you can map out your infrastructure fairly quickly. I think that would be really good. Um, and that we've done that on another case and it was quite useful so that you can really see where all the flows are going quite quickly.
I guess it's just being hyper organized.
Yes. Yeah. Yeah.
Um,
Lots of lists.
yeah.
Yeah.
And just making sure that you are able to manage the process.
Yes.
So I understand you've also led on a USDC distribution or distributions, maybe there's more than one. What does that mean in this context? Tell us a little bit about that.
Sure. So, as part of trying to get repatriate customers as soon as possible, we needed to decide how we were going to do it. And because they're global, it's difficult. You don't want to create tax issues for people in some jurisdictions. We've seen other cases where they've converted to fiat and then gotten into quite a bit of trouble with the creditors. There was also, quite a bridge in terms of creditor expectations with um, US processes, because quite a few are familiar with the types of larger US failures that we've seen, or at least US lead processes. So we really had to challenge ourselves to figure out what the creditors wanted, and how they wanted to receive the distributions. Is it in fiat? Is it in kind? Is it in stablecoin? Is it in BTC? All of the rest of it. But obviously BTC is not possible because the swings are too crazy. Um, and I probably would die. No, but um, so in this situation, we decided to do kind of a hybrid method. So we used a large credible exchange to support us, and that was to basically get a significant amount of the distributions out the door to these creditors. They can do it all offline, like it's absolutely fine. We've just got to make sure our ducks are in a row, as you say, lots of checklists, isn't it? Lots of lists in the background. And then also, we did a few ourselves as well, because there's obviously, because it's an exchange, there's going to be unsupported jurisdictions. So we made sure that we managed that ourselves in-house, and some, kind of corporate customers that needed it. And also we had quite a high band of high net worths up the top. And because you pay distributions via them in volume out the door, so to take the heat out of the cost of the distributions, we did them in-house ourselves. So there was a lot of so there was a lot of scary notes, but there was a lot of
Even when I transfer stuff like from online to
oh,
offline for myself,
yeah,
I mean, it's simple. It's a QR code, or you copy and paste. It's actually pretty straightforward,
it is
but it's still scary.
completely. So there was lots of enhanced source of wealth and source of funds,
Yeah.
and like just silly things like doing proper callbacks. And I'm not sure if you've ever actually had to read a wallet out loud to somebody before, but it takes quite a long time.
It's a lot of effort.
Yeah.
I did in this office, and people started peering above their screens.
Like, what are you doing?
What are you
Yeah.
doing? But it's very easy to make a mistake if you're reading it aloud and you're doing lots of them.
Literally. Yeah.
So you have to be very cautious. Very interesting that you were doing them yourselves. I mean, there's no reason why you shouldn't,
Yeah.
but it can be a bit scary.
Yeah, it was scary, but it's a cost thing at the end of the day.
They're willing,
Trying to intercept
if they're willing to take the risk and say they'll insure or whatever, and they're happy for you to do it.
yeah, exactly.
So
And you always do a test transaction as well, so it's yeah.
you've offered various distribution models in your cases, including one, use of existing infrastructure,
Yeah.
two, use of third-party exchange, which I think you mentioned a moment ago, and three, a hybrid. Talk us through the pros and cons of each of those and what you did in those examples.
Sure. So I think it depends what the platform is, I guess, for the use of existing infrastructure. And the ones that we've seen, I think it's quite risky in terms of some of the KYC stuff and being reliant on the pre-appointment stuff that was in place, because you have to be comfortable yourselves. And even though it wasn't in a UK process, we did still, as I say, use a UK standard, so GDPR standards to everything. So we needed to make sure that everything was going to be above board, because obviously inherently as well with crypto, it's quite difficult with some of the characters that you may see.
And also, I suppose you can't pay sanctioned
No.
entities or individuals, so you have to be
Yeah.
super careful.
You're going to be very, very careful. So that was one of them. But also a lot of the platforms, they're just not set up to make large scale distributions back to creditors. So it'd be very manual. The team that we had, I'm sure, would have been able to execute it. But there's human error involved in that. And like in that situation, I think the certainty of going to an exchange it's a very well trodden path. It's money not in our hands, which is fine. And they kind of assume some of the risk, not all of the risk. So we did do some other checks in the background as well ourselves. But yeah, so it was a hybrid approach just seems like the most sensible to, and like,
Sort of de-risking things when you're doing hybrid, aren't you? Because it's a little bit more
yeah,
mitigated.
it's more calculated risk, I think, in each situation. So you're very aware of it, and you can figure out how to manage the situation more appropriately.
And for each option, there are also payment journeys. I never heard this term before.
Oh yeah,
Journey.
yeah.
Mm. tell us what a payment journey is and what that means in this context?
Sure. So it's kind of one of those things, isn't it? So a payment journey in this situation, if it's going to be like via an exchange, then yeah, you've got to go through all your like usual kind of whitelisting, etc., to get onto the exchange and all your contracts set up and all the rest of it. And you've got two accounts, the US one in Ireland, and when you actually move money onto the exchange, it's no longer in your kind of trading account, and it just goes into a completely commingled account, which is quite scary because if anything happened to the exchange at that time, so it's quite good because they'll execute it in a day, so long as you've got all of your files and everything in a row. We use quite a few data points as well with the exchange, and I know some other larger ones that haven't used as many data points, but I'm sure they've made that calculated risk themselves. And then paying directly, that was also kind of like what I alluded to before. So, you've got someone, you've gone through all of your KYC process, and then you've got to whitelist them too and put money into, send it off to an exchange or send it back so that it loses its footprint as such before you send it on to them, because you're still dealing with individuals that you need to make sure aren't able to be identified.
Lots of checklists, hyper-organized. That's it, payment journey.
Literally.
And what the timeline here,
That
right?
sounds so interesting.
No, I do this. But what's the timeline here? Like, how long are these payment journeys? If someone comes to you and says, "I'm a creditor," well, or at least you understand that someone has been identified as a creditor, how long does it take for this process to be carried out?
Sure. So if someone comes to you as a creditor, it depends because there's other things in the background, like setting bar dates for claims and so on and so
Yeah.
forth. But if someone was like, look, I just woke up from, 6 months worth of sleep and I missed the distribution for a very valid reason or something like that, then, you'd have to consider them because a creditor's a creditor
Hmm.
at the end of the day. And if they were in an unsupported jurisdiction, then we'd look to make the payment ourselves. And I've probably got about like 30 side cases at the minute, which I'm trying to resolve. But everything's kind of landing at a different time. So I've got 8 ready to go, and then we've got 20 who haven't sent me their wallets and done their KYC. So
Yeah.
it's kind of difficult, and you have to call it at some point. But the whole process for that probably takes, as long as you've got everybody moving to the same beat, just it could be a day, but it's going to be like 2 weeks.
It's like when
'Cause
people ask
do
me.
assets as well.
Yeah, absolutely right.
Yeah.
It's like when people ask me, "How long does it take to get assets back that have been stolen?" It's like, it depends.
Yes,
Massively depends. And it's the most annoying lawyer answer, but it depends.
it definitely does though.
Yeah, it does.
Like,
It was unfair of me to ask the question of you that I hate answering myself. It's really unfair.
completely fine.
Um, ta- Taking a step back, you said you've been doing this for a few years now. There are not that many insolvency practitioners who talk about cases that they've done.
Yep.
So yeah, I think to some extent you've got more experience than others who do a lot of BD and marketing, but actually haven't done very much. It sounds like from the experience you've told me, and I know we're not making a conscious effort here not to talk about specific cases because there are ongoing cases.
Yeah.
But I understand you've got quite significant experience given the fact that you've not been doing it for that long, so you think.
Yeah.
But taking a step back, what challenges, given your experience, have you faced specifically where there are digital assets at place, or particularly in financial services?
Yeah, so I think for me, definitely, you kind of touched on it actually. So one of them is absolutely when you go to someone and they say that they're an expert in the market. And it's like, okay, you might have an interest,
Yeah,
but I really need some actual advice. And I need help, and I need help now.
yeah,
I needed it yesterday.
yeah.
So I think that's been kind of challenging, but we've got really good team around us now. We've got obviously people that we can call and like at any short moment, little WhatsApp or whatever, like please help. So that's good. But so that was quite challenging to start off with. Um, for me personally, it's the volatility in the assets because I do all of the accounts and it literally keeps me awake sometimes. And I'm just like, it just shouldn't be this hard. Because normally when you get, in a liquidation, you get an asset, you sell it, bish,
Yeah.
bash, bosh, you got cash in the bank. But in this situation, because you're holding so many different types of random alts and like, I don't know, getting ones that you've just recently minted because you incubated them and then you've got to get them and you've got to vest them and not sell them because you're going to crash a market. Like all of this sort of stuff. I just had no real idea about until getting that kind of hands-on experience. But it's been challenging and making sure you've got a good custody provider and all the rest of it and not everything in one account and, all of the usual little nuances that everybody in the world is probably very used to, but it's been a massive learning curve.
Well, I guess that's it because people in our industry are either frustrated or delighted about the volatility of
Yes.
these assets.
I may or
So-
may not have picked some out or something that where this comes out, but yeah.
And I guess as someone who needs to, I'm not going to use the phrase bean count, but as someone who needs to understand what they've got in front of them,
Yes.
it can be scary.
It is.
Okay, that's been the main challenge, the
But
volatility.
it's not your money.
It's not your money,
Yeah.
but surely the people who
safeguard it for somebody else, and it's
surely the creditors you're sending the money to, as I said earlier, recognize that, but you're still going to get some horrible email
you'll
going.
get slack. Yeah, you'll get slack, and I think that's a insolvency practitioner's job.
Yeah.
Unfortunately, at the end of the day, is you're
You're
the
doing your best. You've
you're
got
the
to
last
please.
port of call. Yeah, yeah.
And what did you do to get yourself comfortable that you understood enough about crypto, digital assets, whatever you want to call it these days, to deal with these sorts of cases?
Yeah, so I think first case, I literally just went home and YouTubed. I was like, all right, I'm gonna spend about 5 hours tonight and just like jargon bust everything.
Yeah.
And then like getting out and talking to like people like yourselves and just bouncing things back and forth and just making sure that I've understood things properly. But there was no quicker learning curve than putting together the accounts. I was like, okay, this is
real now.
this is it. Yeah. And you're like making payments in crypto, be it
Yeah.
distributions or to suppliers or whatever. And you're like, okay, this is a real world now, and you've got some real things to do.
I think you've done it the right way, because learning a little bit, it's not even academically, but just learning stuff on videos. I remember doing this, and I learned on YouTube many years ago, and there was a really good video. Whenever I do presentations, I always put a link to this video. It's still up.
Oh, good. I might
And it teaches you about like how hashing works. That was really, really interesting. And then you're like, oh, okay, that makes sense. Okay. So
Yeah.
stuff like that is really good. And then just getting yourself work and experience is obviously the best lesson.
completely.
And of course, for me, the main thing is we're all still learning. Like people like lawyers and accountants, and everybody says they're an expert and have, what is it, 10,000 hours till you're an expert? I get the sense that we're all massively still learning. So to call yourself an expert in this is, I think, a challenging thing.
Yeah.
But I think you can say that you have experience in it and list some of the things you've done. And then it's for clients to determine whether you're the right
I
person.
agree on that. Yeah.
But I'm very cautious about people who say they were experts in this and now experts in AI, now experts in quantum physics or quantum computing. So I'm very aware of it as well. Thank you very much.
You're very welcome. Thank you for having me.